My dear students, today we will see the financial statement. Today our topic is part of financial statement. In the previous class, we covered how to prepare the comparative income statements. Now, the second part is how to prepare the comparative balance sheet statement. For this purpose, we take one university question paper. From the following balance sheet, prepare comparative balance sheet statement and comment on it. Here is given a balance sheet for 2 years period information. Assets are given for 2 years period. At the same time, liabilities are also given for 2 years period, 2005 and 2006. Here assets, land, building, plant, furniture. These 4 assets related to fixed assets. These 4 assets are called it as fixed assets. And then stock, debtors, cash. These 3 assets come under current assets. Just like liabilities also given, the entire liabilities should be classified into 3 categories. One is current liabilities. In the given balance sheet, bills payable, creditors and tax payable. These 3 items come under current liabilities. And the second part is second part of the liabilities is long-term debts. That is known as debentures. Second. And third part is reserves and capital. Under this head, preferential share capitals, equity share capital and reserves, these 3 items come under reserves and shares. The entire information given in the balance sheet for particular 2 years period, 2005 and 2006. With the help of this balance sheet, how to prepare the comparative balance sheet. In the previous class, comparative income statement already we discussed. Just this comparative balance sheet statement is nothing but just like comparative income statement. When you observe this format, here also these format divided into 5 parts. Particulars 2005, 2006, which are given in the balance sheet. And the 4th column, increase and decrease values should be divided into 2 parts in terms of rupees and in terms of percentages. When you observe the comparative income statements, there also 5 columns, the same columns. That's why I am telling you it is nothing but in the format point of view, both formats are common. So first of all, the student must design the format like 5 columns. Particulars 2005, 2006 and increase and decrease value should be divided into 2 parts, rupees and percentages. First of all, we have to put heading like this: comparative balance sheet statement as on December 31st, 2005 and 2006. How to prepare? Preparation of comparative balance sheet is nothing but showing the entire balance sheet information should be mentioned in the statement in headings wise. That means, first of all, you should take, when you take the assets, these assets should be classified into 2 parts: current assets, fixed assets. First of all, write current assets. What are the current assets given in balance sheet, stock, debtors, cash. So these three assets come under heading current assets. First, stock, debtors, cash. These three assets are current assets or liquid assets also. We can call it as liquid assets also. First, after writing these current assets in the particulars column, simply mention the values in the given periods. Stock here is 40,000, 60,000, 40,000 and 60,000. Simply write. Debtors 40,000, 60,000. Debtors 40,000, 60,000. And cash 20,000, 28,000. After write all these information in the given periods, simply total up these three items: stock, debtors, cash. When you add these three items, 40, 40, 80 plus 20, 1 lakh. For 2006, 60 plus 60 plus 28, 1,48,000. For this, you simply write total current assets and put A letter in box. It indicates the total current assets. And then write the remaining fixed assets. 4 assets are given in the balance sheet: land, building, plant, furniture. Under these fixed assets, you simply write land, buildings, plant, furniture and mention these values in the given periods. Land 20,000, 2006 also 20,000. Buildings 60,000, 54,000. Plant 60,000, 54,000. Furniture 20,000, 28,000. After writing this information in the concerned years and simply add these 4 items: 20 plus 60 plus 60 plus 20, total 160. This is the total fixed assets, and write or put B letter in a box. This indicates total fixed assets. At the same time, for 2006, the total fixed assets are 20 plus 54 plus 54 plus 28, 1,56,000. For these two values, you simply write total fixed assets and put B in a box for the indication of total fixed assets. That means the entire assets are over and mentioned both current assets and fixed assets and given a symbol A and B. A for current assets and B for fixed assets. After finishing this assets task and then come to liabilities. Already I told you these liabilities should be classified into 3 parts. One is current liabilities. Under this current liabilities, here is given tax payable, creditors and bills payable. So you simply write tax, creditors, bills payable. How much tax? 20,000, 30,000. Simply write 20,000 and 30,000 in the concerned years. Creditors 30,000, 40,000. Bills payable 20,000, 10,000, 15,000. After mentioning these values in the concerned years and simply add these 3 items: 20,000, 30,000 plus 10,000, total 60,000. For this, you put C letter in a box. It indicates total current liabilities. For 2006 also, 30 plus 40 plus 15, 85,000. Total current liabilities. For these 2 values, you simply write total current liabilities and put C letter in a box. It indicates total current liabilities. And next, write the long-term debts. Under this heading, only debentures are given in the balance sheet, 20,000, 30,000. So you write 20,000 and 30,000. For this, you put D letter in a box. It indicates total long-term debts. That means here only debentures only given. That's why you simply underline this. And then finally, the remaining three values: preference share capital, equity share capital, and reserves. These three items are come under shares and reserves heading. So you simply write preferential share capital 60,000, 60,000. Here given 60 and 60. Equity capital 80,000 and 80,000. You simply write there. And reserves 40,000 and 49,000. So after mentioning these values, you simply add these three items: 60 plus 80 plus 40, 1,80,000. In the same way, 60 plus 80 plus 49, 1,89,000. For this, you simply write total shares and reserves and put E letter in a box. This indicates total shares and reserves. And finally, you write total liabilities. Already you mentioned total assets. Total assets. A letter, B letter. A plus B. A letter 1 lakh, B letter it indicates 1,60,000. These two items 2,60,000. For 2006 1,56,000. 3,04,000. So for this total assets A plus B, just like here also you mentioned total liabilities. Liabilities are starting from here. Current liabilities. Total current liabilities C. Total long-term debts D. Total shares and reserves E. When you add C, D, E, these three items if you add, you will get total liabilities. C plus D plus E. C total 60,000, D total 20,000 and E total 1,80,000. When you add these three items, you will get 2,60,000. This is the entire liabilities of 2005. Like this, when you add C, D, E, this item C, this item D and this item E, when you add these three items, you will get 3,04,000. This is the liabilities. It is nothing but you are showing this balance sheet values in the statement, but in the shape of divisions, or you are classifying all the assets and liabilities and mention those values in the statement. That's why when you observe these 2005 total liabilities 2,60,000, here this is the value already given in the question paper. At the same time, asset side 2,60,000. This is 2,60,000. That means all the totals of balance sheet are also shown in the statement. But all these assets are classified into two parts. All these liabilities are classified into three parts. The division must be shown in the statement. Otherwise, this is also balance sheet. So, when you finish this task, I will recap. First, write current assets and add total current assets A for 2 periods. Then fixed assets, add up all the fixed assets and write total fixed assets. You must put B letter for the indication of the total assets. And finally, you have to add both current assets and fixed assets. That means A plus B, you will get 2,60,000 and 3,04,000. This is the total assets. Total assets. Like this, you mentioned all the liabilities under three headings. Current liabilities, tax, creditors, bills payable. These are current liabilities, and add up and put C letter. This indicates the total current liabilities. Like this 85,000 for 2006. This total indicates total current liabilities. That's why you are writing here total current asset liabilities. And then long-term debts. Debentures only given come under long-term debts. You simply write and put D letter for the indication of the total long-term debts. And only the single value, that means you simply underline it. And then finally, under the shares and reserves heading, you simply write preferential shares, equity shares, and reserves, and after mention these three items, you simply add. You will get 1,80,000 and 1,89,000 for 2006. For this, you put E letter in a box that indicates total shares and reserves. When you add C, D, E, if you add these three items, you will get total liabilities 2,60,000 and 3,04,000. This is the first step over. And coming into next, increase and decrease value. These increase and decrease values should be divided into two parts. Part 1 is rupees and part 2 is percentages. How to get increased and decreased values in terms of rupees? When you compare the values of 2006 with 2005, automatically you will get the difference value. If it is increase, you put plus. If it is decrease, you put minus. This is very simple way. You see here, stock is 40,000 for 2005 and 60,000 for 2006. Simply 20,000 increased. That's why you put plus mark. Like this, 40,000 debtors are changed into 60,000 in 2006. That indicates 20,000 increase plus. At the same time, cash 20,000 is changed into 28,000 in 2006. That means 8,000 increase, you put plus. Like this, all the decreased and increased values you can calculate like this. When compare the current year value with base year value, you will get increase or decrease. Here, land 20,000, 20,000, there is no change. You simply write, put hyphen mark. Building 60,000, 54,000. Here, the value is decreased. That's why you put minus mark. Here, 60,000, 54,000, same, minus 6,000. Here, 20,000, 28,000, 8,000 increased plus increased value by indicating plus value. Like this, total assets 2,60,000 is changed into 3,04,000 in 2006. That means 44,000 increased. You simply write plus. Like this, you compare all the current year values with base year. Automatically, you will get the increased or decreased value. If it is increased, you simply write before the value plus. If it is decreased, you simply write before the value minus. Like this, you can calculate all the increased or decreased values by putting plus or minus. After that, final stage is calculating percentages. Why we are going to calculate percentages? Generally, these increased and decreased values may get confusion by the managements and CEOs or the owners. For the sake of their comfort, we are converting these increase and decrease values into percentages with the help of this formula. How to get percentages? For percentages, increased or decreased value divided by base year value into 100. By simply applying this formula, with the help of this formula, we can calculate percentages. For example, here stock 40, 60, How much increase? 20,000 increased. For this 20,000 we can calculate percentage. How? 20,000 increased value, 20,000 increased value by base year value. Here 2 years are given, 2005 and 2006. 2006 is current year, 2005 is base year. So 20,000 divided by 40,000 into 100, you will get 50%. Like this, all the percentages are calculated with the help of this formula. Increased or decreased value by base year value into 100. Just like 20,000 increased. 20,000 by 40,000 into 100, you will get 50%. 8,000 divided by 20,000 into 100, you will get 40%. Like this, 48,000 increased value by 1 lakh rupee into 100, you will get 48%. Here is no change, 20,000 to 20,000, there is no need to calculate the percentage. So both values are equal. Here is 60,000, 54,000 minus 6,000 decreased. How to get the percentage? With the help of decreased value minus 6,000 by 60,000 base year value into 100, you will get 10%. Just with the help of this formula, you can calculate all the percentages. After finding all the percentages, simply you mentioned here. But student, task is not yet over. Your work is not yet finished. You may think, sir, I prepared the entire comparative balance sheet. My task is over. No. Your duty starts now. Why? Because you simply observe after finishing the preparation of the comparative balance sheet, you observe the statement, what are the views of the student, must write in the bottom of the problem in a simple paragraph. What are your explanation? What are your narration? What are your interpretation? All views, each and every views, each and every explanation, each and every narration, each and every interpretation. By observing all the percentages, you should mention your views and make it a report. And make it the report with the help of the paragraph remarks and submit to the hierarchy. That means managers or the owners or CEOs. With the help of your report, they will take decisions for further development of the business. So your main duty is, after preparing the financial statement, after preparing the comparative balance sheet statement, so each and every student must act as management accountant and write your views by observing this statement in a small paragraph. It is nothing but a report. It should be submitted to the owners of the management for the sake of business development. So, how to prepare the paragraph? How to give the explanation? How to give the narration? How to interpret? I will tell you. Suppose here is so many values are there. You need not compare all these values. You simply take 3 items. Total current assets. Total current assets for 2005, 1 lakh. For 2006, 1,48,000. How much increase? 48,000. How much percentage you get? 48%. Within the 1 year, total current assets are increased by 48%. It is a good sign for maintaining the business. At the same time, total fixed assets you should take, when you take total fixed assets are 1,60,000 for 2005. For 2006, 1,56,000. Here total fixed assets are reducing by 4,000. It doesn't matter. That indicates firm cannot be extended, cannot be expanded, cannot be extended. That means it cannot be developed. Why? Because assets are decreased by 4%. It is negligible. It doesn't impact on the running of the business. So you simply ignore it. Your main interpretation is just observing current assets and the current liabilities. Total current liabilities are increased by 41.67%. That means 42%. Current liabilities are 42% increased. Whereas current assets are 48% increased. Here liquid assets are 48%. Here liquid liabilities are short-term liabilities are 42%. This indicates firm is in very good position to repay the current liabilities within a period, because the firm have 48% current assets, whereas 42% only for current liabilities. If you pay the entire current liabilities, you will have 6% of assets company having. There is no problem. When compare these two values, when you compare these two values, current assets 48%, current liabilities 42%, it indicates whenever the current assets are more than the current liabilities, the firm's financial position is very sound. That should be mentioned in your paragraph and make it report and submit to the hierarchy or owners or the managers. This is the final touching of the student acting as a management accountant. Here also, when you observe here long-term debts, when you observe the long-term debts, 20,000 in 2005, 30,000 in 2006. That means long-term debts, debenture holders from outside, we got 50% funds from outside by debenture holders. At the same time, when you compare the long-term debts or the current liabilities, 4167, we are having outside amounts 50 rupees. This amount contributed by the debenture holders. We are having 50 rupees, just like suppose we are having 50 rupees. We have to pay current liabilities 42 rupees. Company is in a solvent position to repay that amount. So this may be the reason the reserves are 22.5 increased. Reserves are nothing but out of this amount of reserved out of profits. Profits are, when we get more profits, the company will preserve some reserves for a particular purpose. Here, preferential share capital and equity share capital, no changes. That means company capital is constant. That indicates the company is not extended. But the reserves are 40 and 49, 9,000 increase. It indicates profits are 22.5% increased. This is a very good sign. In such a way, student have to observe the financial statement and find his views by comparing all this information, and should write in the paragraph how the company position is sound or unsound, how the current assets are growing, how the current liabilities are there. Suppose the company is in a position to repay the current liabilities by getting money from the current liabilities, current assets, that means liquid assets. Where we have current assets, that means liquid assets are more than the liquid liabilities in the given problem. Like this, students' views must be mentioned in a small paragraph, and that paragraph should be treated as a report which will be submitted to the management. In this style, student first prepare the statement and interpret all the information, all the heads, and simply write in a paragraph. Here the student task is over. I think each and every student, they can understand this problem very well. If you like this video, press bell icon button and subscribe more. In the next lesson, I will meet you all. Until that, bye.